Good evening, everyone. Welcome to the webinar on power of technical analysis. As most of you know, right, 90% of the traders, whether market is in bullish or bearish, whatever is the condition, 90% of the traders are generally not able to make profits from trading because of one main reason, even though they follow alerts or whatever it is, not having enough awareness about either fundamental analysis or technical analysis. That is one main reason many of us cannot make the profits or the potential profits what we can make. Right? As we all know, fundamental analysis is more about understanding about the company balance sheet, their profit and loss accounts, the institutional purchases, insider purchases, what sectors are the hot sectors now, right? Which companies, which stocks to buy. But that information is not enough for us to make proper, right? What companies to buy is important, but also we need to know when to buy, right? The technical analysis is the study which helps us to analyze the historical data and helps us to identify the proper entry points or exit points, whether we are doing it for swing trading or whether we are doing even for investing also, right? We don't want to buy a Tesla or Nvidia or MSTR or something closer to a resistance level or something, right? So for anything, understanding a proper entry point is very, very important. That's where 90 to 95% of us, right? More than 80% of the traders uh, don't even have awareness about what is a OC, what is a OCO order, what is an OCO order, or how to use trail stop loss or all those things. More than 95% of the traders don't have the awareness about basics of technical analysis, because of which they are taking a huge risk. So our objective is to share like what is technical analysis, what is the power of technical analysis, advantages, and right, why do we need to have some basic knowledge. All those things we'll discuss today, and we'll be doing more of these webinars every month. And right, let me introduce Mr. Uday. He got over 16 plus years of experience in trading and also training. He trained thousands of the members, right, for right choice, and also individually, even before right choice, he trained many members on technical analysis and options. A great trainer, great mentor. So he will explain about why technical analysis, why it is important for each of us to know about technical analysis before investing our hard-earned money. Right? With that, it's all yours, Uday.
Thank you, Kishore. Hi, everyone. Thank you very much for taking time to join this session. So I go by the name Chart Sniper, and I have been in depth into technical analysis for multiple years, and I have acquired in the process a lot of knowledge, and also like I learned a lot of lessons also from the market. So the main effort of sharing this information is try to prevent all the ways that have done mistakes, right? Like we wanted to kind of provide this information to you so that you don't repeat the same mistakes as done by many traders, okay? So, and technical analysis plays a very, very powerful role in trying to make the right guesses, predict the right moves, and also not to make mistakes, okay? So this session is to kind of enable you to understand this technical analysis better, so that for your trading, either it is a swing trading or individual trading, active trading, options trading, it doesn't matter whether you're trading Bitcoin or precious metals or futures or stocks, it doesn't matter. So technical analysis will be very helpful, not only for swing traders and day traders, even for scalpers also. So there are a lot of advantages of this one. So this is just to kind of bring awareness of technical analysis for all you guys, and also provide some tips and a right perspective of looking at the technical analysis, why it's important and how it will be helpful for you, and help you in that way. Okay, so this is the main agenda today, completely introducing technical analysis to you guys, and also looking at some of the stocks and the current market situation, and providing some options if you want to deep dive more into technical analysis learning. Okay, so let's get started. So there might be a Q&A session towards the end. So if you have any questions, they will be answered. So let's get started. So so there has to be some goals whenever you do something, right? Whether trading is kind of whether you do it as a hobby, as an investment vehicle, what should be the primary goal of trading? So primary goal is always to make money. Okay, but the ultimate goal should be not losing money. So that's what you should be focusing on. When you do not lose money, then ultimately you start making money, right? So there has to be a clear change in perspective for most of the traders, how not to lose money. Okay, so that's important. And there is some reality to stock market when compared to perceived things that you hear from people who made a lot of money. So stock market is really a good vehicle to identify to kind of make money, because it's the largest platform where trillions of dollars gets exchanged, very big players play in it, and that's ultimately the best platform for you to make money. Okay, and but unfortunately, with recent advancements, 95% of current trading is being done by algorithms. Okay, big funds who have a lot of resources under them doing thorough research, and who have a lot of money to build these powerful algorithms and also get some powerful insights, they are at a very clear advantage of making some money in this market, right? Most of retail traders like us, they are at disadvantage and might end up losing a lot of money, because ultimately if someone is making money, other people have to lose money, right? So we are at a clear disadvantage of being on that side most of the times. Okay, and there are two forms. Basically, they're passive investing and active investing. Just to kind of you are clear on what they are. Passive trading is investing in stocks, mutual funds, or index funds for a long term, right? So you just kind of every month keep adding some money, and over a period of time, it grows like the 401k that you have, or a college savings plan that you have. And there is active trading also, especially because of this COVID work from home environment. A lot of you guys might have entered into this active trading where you're trying to buy and sell stocks more frequently, and trying to make a lot of money, right? Because the index funds, if it gives 20%, the main goal of active trading is at least get 20% in the worst case, or make more than that, right? So that should be the ultimate goal. The goal is to kind of beat the market as such. Okay, but what happens in the process after a couple of months of very good um, turnover, like making money? Sometimes you'll have very bad months also. Like 6 months you can make very good profit, and your account doubles in size or triples for that matter, and then one bad month takes all that profit away. So that's why you need to kind of look at the annual basis at least to see from in a year how much S&P returns. If S&P returns 20%, and then if you are losing money, like your account ended up being flat after all the ups and downs, right? A lot of drama happens in between. So you have to kind of do that kind of analysis year over year. I'm spending a lot of time in trading, and I'm doing like a lot of hours. I put a lot of hours and effort in this, and a lot of money also. But am I able to beat the market or not? So if you are not doing that, if you're not beating the market at the end of the year, so there has to be something missing, right? So first thing that you have to ask yourself is, do you have all the expertise and tools at your disposal for beating the market? That's the important thing, right? You can't just beat the market like that. You have to act or take some decisions differently, right? And if you're still not successful consistently, you have to upgrade your skills, and also follow some safe trading strategies. So that's where this technical analysis helps. And this is just a quick overview. A lot of people might know all these things already, but before jumping into the live demos and stuff, I just want to kind of provide some overview for you guys. So what exactly is technical analysis? The good thing about technical analysis is it is independent of what instrument you are analyzing. It doesn't matter if it is Apple stock or gold, precious metal, Bitcoin, or for example, if you actively track your own performance in the trading, like every monthly averages of stuff, it can be applied even to those the way you are making money, the way you are losing money also. It's independent of the instrument, so that makes it a little bit simple for you guys to learn once and use it multiple times across multiple instruments. Okay, and what ultimately it boils down to is technical analysis is more of a crowd behavior psychology. What it means is when you take millions of traders, some big shark, big players, some retail traders, and some sentiment traders, some trading based on news. When you take all that big crowds trading in a single platform, how do their crowd psychology determine the making decisions, right? So always when someone is selling, someone else is buying, right? So uh, a lot of people question whether technical analysis is really applies or not, but that's why I want to say it's not, something came out of nowhere, right? It is a quantitative representation of how a crowd behaves, okay, in larger numbers, like millions of traders and stuff. So a lot of people, I mean, as clearly as you understand that, it's very important to learn ABC before you start writing words and sentences. It's very, very important, especially in academics. You almost spend 1 year or 6 months in a semester to learn stuff before you give that final exam, right? So that is true for even for trading also, but unfortunately a lot of people jump directly into trading because they have money in the balance and there are trading platforms at your disposal without even learning these ABCs or important things, right? So that's where they might get a sudden boost in their income, but that is not sustainable if you don't understand how to predict and how to do technical analysis. So that becomes very fundamental then. So before you invest a lot of your hard-earned money and savings, and especially the time in this highly addictive emotional cycle of trading, I would recommend you guys to kind of give some attention to whatever scale that you can to at least some simple strategies using technical analysis. Okay. And this is typical boom. This started in March of 2020 at the bottom, right? If you are new to trading, if you just started trading, this is what you'll be seeing. You are completely optimistic. You are in euphoria probably in February, that time frame. And then you hear people making a lot of money. You also made a lot of money, and this is euphoria, right? This is great, and you want to invest more. And then when the market starts falling down, probably in March it did once, and then it is doing it now also. So you slowly the fear comes in whenever you invest a lot of money, like you have 50K, 100K in your market, and suddenly you are seeing losses, then you'll say, okay, I'm in the stocks for long term, so I don't need to worry about this short term, right? And then slowly, when it kind of makes a big dive, you'll be very, very worried about it, and you finally give up. Like you sell everything, and then as soon as you do that, the market starts rallying. So this is a lot of emotional cycles, and whenever I mention crowd behavior psychology, this is what it means. People get carried away. They kind of wait on the sidelines throughout all this optimism, and especially on the very tops, they jump in and they buy here. And when it falls down, they hold for a long time on losses, but suddenly they give up on one fine day, frustrated, and then it starts rallying. So quantitatively, how these emotions can be applied and how you can avoid buying stuff here in this phase and selling at losses in this phase, right? So that very critical, important. Okay. So how technical analysis helps? So primarily, it's very simple. It's all to do with understanding how price changes and with how much volume it is changing over a given period of time. That's all to it. Only three components, and each component you have to do a deep dive and analyze stuff. And all the technical analysis and price action is based on this one. And why understanding this price action is good? Because you might follow a lot of news, you might follow everything. For example, if someone knows good news is coming about Tesla in the AI event, say, then already people who know that news starts buying Tesla, and you see first in the price action that the price is going up without any reason, and then the news comes in. And sometimes it could be like you suddenly the stock looks strong, suddenly it starts falling for no reason. You see that its stock is falling, and then the bad news comes, right? So especially when you believe that there is a lot of information that big guys know before the retailers know, uh, they make some moves, and those moves will be very visible in the price action, and that you can clearly see in technical analysis. So a lot of people say price action, understanding it's the ultimate truth and not any news or something like that which can be manipulated. So they stick to that. Okay. So understanding the fundamentals on which major trading algorithms work. So if you have to write an algorithm, if you are a programmer and stuff, you have to write some rules, correct? So by when it comes to this level cell, so the algorithms can't work in vacuum. So there had to be based on rules, and this technical analysis is the basis for all those algorithms, creating those algorithms. And the more people start looking into these things, the more powerful these algorithms become, because more people believe in this technical analysis and they take a decision. So this has a powerful influence of this crowd behavior psychology, right? So once a selling starts, then everybody starts selling because, yeah, the selling or buying will be extreme. Especially nowadays, it's happening quite a bit. Very, very big bars in selling and very, very big bars in buying. So you have to be careful about those volatility. And how technical analysis helps? It helps in identifying the entry and exit prices in stocks, which becomes very critical. Imagine that you know that the stock from now onwards can move $20. And if you have like $100 stock, right, 20%. So if you have like 10K account, you made $2,000, right, just by knowing the fact that it can move this much amount. And it also helps you in identifying supply and demand zones where major reversal is happening. So some stock will be falling, continuously falling, and then you don't know where exactly it will bounce. But understanding these demand zones will help you come up with a zone where it's good to buy. And it also helps you in identifying multiple support and resistance levels, so that you can do the profit booking in a staged manner, and also do the cost averaging, whenever it starts falling, buy now, buy some now, buy a few later, and like that cost averaging, it helps you to identify those levels at which you need to do that. And imagine if you do not know all this stuff, you are just playing blindfolded, right? You do not know exactly when something is going to happen, what move will kind of knock you down. So you can avoid all that, at least by having some basic technical analysis information. So I will try to kind of put it in such a way, because I get asked a lot of questions. Okay, a lot of people who are trading gets asked ask me a lot of questions. So I'll start. Let's try asking those questions and how technical analysis helps it, right? So, for example, is the market bullish now? Is it euphoria or bearish? When you want to know what are the different phases of stock typically goes through, understanding accumulation and distribution, if the stock is in an accumulation phase or distribution phase, might help you with that. And with a little effort, you can know clearly whether the stock is in accumulation or distribution. Okay. How does people's psychology and crowd behavior moves? I mentioned crowd psychology, but how do you quantitatively measure that? Okay, so Elliott wave and some chart patterns like head and shoulders patterns you might have heard, cup and handle formations, symmetric triangle formation. A lot of chart patterns are there which quantitatively capture in a visual form for you this crowd psychology behavior. And when a breakout happens of that pattern, then the stock moves very quickly. Which stocks to buy? That is kind of very common question, right? So if you know how to measure the relative performance of a stock or like beta of a stock, then you should be able to pick some stocks, because beta is more like how it is performing related to the market. So for you to be able to beat the market, you have to kind of understand beta, so that you are picking stocks with higher beta, so that there is a very good chance of beating the market. How can I determine changes in supply and demand? When do you know that? So um, candlestick patterns are pretty good in visually representing to you when some characteristics of the stock change, the direction of the stock change. So like this candle is a resemblance of a negative reversal, and these candles are positive reversal, right? So is stock in uptrend or downtrend? How do you know that? Assuming a blank chart, you might not know these things, but understanding moving averages might help you. So when a stock is going like this above its average price, that means it's uptrend. When it is below the average, it's a downtrend. Very, very simple things like that, right? Is the stock very extended? How do you know if the stock is very extended? So Bollinger Bands might help you identify that it's gone too beyond. For example, here these red lines are Bollinger Bands, and whenever you see that it hits that upper level, that's too beyond. And whenever it hits the down level, that's too beyond. It's expanding along with the price, but it can clearly help you in at least knowing some levels of extendedness than not knowing anything, right? So just kind of, I'm trying to insert these slides on what was predicted and how it turned out to be. So this is on July 29th when Amazon earnings were announced. It looked very weak, right? It started falling. So a lot of people, as soon as it came to that level of 3,500, they were trying to buy. And some people asked me, 3,400 is a good level to buy. So I clearly kind of looked at it, looked at things. I mean, especially when you get good at technical analysis, you have that gut feeling, right? So I charted on that day that it can possibly move all the way down to here with some intermediate stops in between. Okay, so that's that thing. And here is how the today, as of today, like how the chart looks like. So it exactly stopped there. It stopped there for some time and stopped there for some more time. So imagining having availability to this kind of information and analysis. So no one, I am not saying one level, right? I'm giving you 3 different levels, and knowing this information might have prevented you entering into Amazon or buying Amazon stocks at 3,400 or 3,300, and would have enabled you to wait patiently until there is a perfect time to buy um, Amazon stocks. And that came very close to, like today, it came very close to that level. So for example, if you go and look at Amazon now, here's what happening. It exactly bounced. For example, I have this chart here, right? So let me go on to the intraday 30 minutes. And what happened there? It bounced that level and it hit, right? So if somebody had any doubts the technical analysis works, this is a good example on how much powerful it is. That's why this session is titled Power of Technical Analysis, right? So, and when you add volume to it, you are seeing that there is a lot of buying here, and then some fizzling out, and there is a lot of volume here also coming in, especially after hours and stuff. So, so it's a very, very good tool to have in your disposal, so that you can find some zones of buying. Okay. This is just one example on how you can get a right entry or avoid wrong entries. When you avoid wrong entries, the probability of you making losses will be very, very less. Okay. Some more questions to ask is how I can focus on riding the big wave. Because a lot of times people say, oh, I booked profit very early. Or yeah, that is very, very common problem. So technical analysis, as simple as moving average, might help you stay on the right side of the trade and continue riding the big wave. Okay. So that's just simple moving averages, but sometimes multi-time frame analysis also helps. What multi-time frame analysis means? It means that you look at daily, weekly, and hourly, and then try to find how it is trading. So for example, when we go and look at something here, say, so we are looking at Thermo Fisher Science. So what's happening here on a daily basis, right? So there's a lot of up and down across the averages, but actually when you look at weekly, the gray line that you are seeing is a simple the 5-period average. Okay, every week comes by it closing above that 5-period average. So if you are a long-term trader and you got in say at 470, okay, it's probably a lot of weeks ago, like a couple of months ago, 440, how would you know, like maybe you should book profit at 500 or 540? How do you know that? And how can you ride this entire possible big wave than kind of exiting at some level and not being in the stock anymore, right? So simple one line technical analysis moving average might help you keep on riding it as long as it closes above that. Okay, so as simple as that. So um, and daily might be chaotic, hourly might be even chaotic, but weekly might see you get you the right trend, right? So that helps quite a bit. So how and where the big players are positioned in a stock. Okay, so if you are asking that, then the volume analysis and GMMA might help you. Those kind of technical indicators might help you quite a bit there. And how far a stock will bounce after a big drop. There is a big drop and how it will bounce. So Fibonacci retracement might help you there. So for example, in which stock we have a big drop? Amazon, right? So if you have to understand like how much, let me see. How much it could bounce higher, right? So you have to just use something like Fibonacci retracements and retrace this entire move to get you, at least instead of trying to make wild guesses, like quantitative approach of what is the first level bounce that happens, what is the second level bounce happens, the third level bounce, right? So that is a very good quantitative way of knowing that levels comfortably. And yeah, so that's it helps there, like what are the different levels as part of a retracements, right? And where does the stock that is at all-time highs stop, right? So for example, there is this stock like Thermo Fisher that we are looking at, it's just making it all-time high. So when you are looking at this here, let me go back. And so if it broke out here, right? It broke out here, and how would you know where it goes from after that, right? So in that context, extensions, Fibonacci extensions might give you. So for example, this is a price target, and there is a bull flag here that's forming. How would I know that it's a bull flag pattern? If you see there is a big pole and there's a flag formation, right? So how, based on this, whenever the bull flag breaks out higher, you can calculate some price targets, okay? So like that, you can get some levels, okay, rather than trying to kind of make a random guess or take your friend's or advisor's word for granted. You can just simply learn this stuff yourself. Okay. Fibonacci extensions and pivot points might help. What are the target price of breakout in chart patterns? So this is, say for example, you are seeing a lot of improvement in Disney stock. Okay. And in Disney, what is there? There is a symmetric triangle formation that is clearly visible for you here. And if it kind of tried to break out that formation here, but what happens if it bounces back here, right? So the symmetric triangle as it is designed, if it breaks out, the price target is going to be 196, because if you take thousands of symmetric triangles, or maybe 10,000s of them throughout the history of the market, right? There were so many stocks, and there is hundreds of years of history. And if you go and analyze, whenever this kind of formation happens and breaks out, overall, what is the average gain that you get, and use that statistical analysis to predict, calculate it, then that would be the price target. Okay. So knowing that is very powerful. And so, for example, this line that you're seeing here, the green line, you are able to plot whenever you have these 2 points. Okay. But once you are able to plot that line, trend line, see how many times it helped you in future. So it exactly came to that level, up to the penny, right? How powerful it is. Instead of buying here somewhere, you probably will decide, okay, I can't control the fear of missing out, right? I'll buy 10 here, 10 here. But if this trend line gets revisited in future, I'll buy probably 50 there, because it's an uptrend. And then there it is, again touching that again, and where it exactly it ended here today, same thing, right? So this trend line, one simple line as part of technical analysis, if you know how to draw it, then you are getting multiple chances to buy this stock. Okay. And you know where exactly it will go once the breakout happens, right? So that's the first level where it's going. Okay. So what are support and resistance levels? So pivot points, moving averages, and volume weighted average, all this will help you quite a bit. Okay. So this is titled differently, but this is, okay, I was preparing these slides. It's actually Alta. So Alta chart in August 4th, I mentioned looking at this ascending triangle formation, that it might go to this level. Okay. And it's very powerful, right? The chart was at 344, right, at the time, and we are guessing it to go 365. What exactly happened? This is chart as of today. It break out and then went there and reversed. Okay. So imagine if you have very good amount of cash at your disposal and the confidence is very high. So you can make a lot of money there, right? So you clearly know what is the pattern, what are the price targets, and Alta is not done yet. Earnings are still there, but we have some upside targets there too. Okay, but maybe once it comes back to the market, this trend line acts as a support, and probably you could wait to see how it performs here at this level. If it comes down, probably this will be a good level. 340 will be a good level to buy again. So you're getting so much information through technical analysis, right? So the stock is gaining or losing momentum. How can you identify if a stock is going sideways or going things? So some of these studies help you in that, how much a stock typically moves. Some studies like implied volatility or ATR might help you identify that. Average stock, this moves $30. Tesla stocks moves $100. Rather than taking person's words or an expert advice, you can just find out yourself, right? So how is stock performing compared to its peers, right? So for example, when you take Nvidia and AMD, which one is better to buy? Or Home Depot and Lowe's, which one is better to buy? How do you compare, right? So because that comparison is really important if you want to beat the market. You can take a stock and compare it with market. If market is going up and stock is going down, you don't need to buy the stock. By buying the stock, you're losing. Okay, so those kind of things, it will be very helpful. So understanding the market sectors and relative performance, like AMD, the semiconductor stock, in semiconductor stocks, what stock is doing better in the sector. So that's very important, right? And how can overall market impact my stock? So your stock might be doing pretty good. See this TMO market has been going down and it's going up, right? Netflix today, see that move when the market actually went down, right? So yeah, so we have to be understanding of that thing, okay? And how do you do that? You learn how market internals, what are the different types of market internals that gives you a rough estimate of overall, is there like the whatever move that the market is making, is it supported by the actual move in stocks, or is it kind of a fake move or a weak move? You can actually find some divergences in that. How can I pick the best stocks to invest? So you can use, once you understand all these technical analysis and some of the indicators that you can use, you can create stock screeners and technical analysis scanners based on that. You have your criteria, you understand what exactly works, and then you put that criteria in the scanner and it spits out some of the stocks that you could buy and which are at a major support levels and stuff, okay? So this is already we discussed. Say, for example, this is on June 4th, right? So what typically happens in technical analysis is a chart pattern that you see repeatedly occurs. For example, this is a Microsoft at the time. So the analysis was, we had this move and then there was this consolidation and it moved quite a bit at the time, right? So there is a potential for that kind of move that happened. This was on June 4th. And when we go and look at what happened to Microsoft after that, so that was a time where we guessed it will go to that level. It went beyond that level, right? So a lot of people would be surprised and probably sell it at here, right? But it continued going higher. So because if you know technical analysis and if you understand how to draw channels, right? So what it is doing is it's trying to, whatever move that happened here, it trying to kind of make the similar kind of moves, right? So now once it started moving here and it's breaking out, so like half of that move is this red line. So that is exactly, you paid, for example, you bought 100 stocks of Microsoft here at a support, right? Because these lines that you're seeing, they are not drawn to fit this one, right? They were drawn based on some interaction happened here. Okay, these two things. So from the past chart patterns, when you project it into the future, you're getting these supports. And look, it kind of respected that quite well. And then it started going out. So now if someone comes to you and asks, how far will Microsoft go? How high? So because it was able to kind of make this much moves, like in the channel, same amount, here to multiple times, there is a very good probability that it can move the similar kind of move in future also. So what happened there? It kind of started bouncing, and see exactly where it, and this channel was not drawn to fit this one, right? It channel was there from these 2 points, okay? And see how you were able to kind of predict here. If you bought something here, this was a very good move. That is where you come out a little bit, okay? If you have bought 100 stocks, 50 you get out there, you come out of there, okay? And then it's continuously going and trying to be there. This is the good thing about upward channel, right? So the stock can still stay in the channel. It doesn't need to break out of it, but it can still make new highs, okay? As the time passes by, it can makes new high. You might be understanding what are these red lines, right? These red lines are where it forms significant resistance, some pivot points there, okay? So those are the different studies that might give you these numbers. And if you go and look at a chart just like this, without anything, it looks very random, right? But when you quantitatively understand some of the patterns and learn how to use them, it will be a very powerful tool. So those were some examples. what right choice advisors really believe is, even though they can give all the alerts of stocks and options, when to enter, when to exit, that's really helping them retain a lot of people for a longer durations, and also kind of generating this service kind of thing, right? But that's not what they're doing. They're trying to make these concepts understandable by a lot of traders, so that they can analyze some of this information for by themselves, and also enter and exit depending on the risk profile, right? Because I might have, say, a $10,000 account. Some people might have $1 million account. So a person with $1 million account can withstand $20,000 loss without any question. But a person with $10,000 account can't even withstand $1,000 loss or $5,000 loss, right? So the traders are very, very diverse, and enabling those traders, especially understand their account size, their risk profile, will help them make the decisions by themselves, right? So so whatever that learnings that I have with technical analysis, if I have to break down into 4 different segments. So one is the basic technical analysis, which is very, very good for people who are beginners, who do not actively trade and who just invest in stocks long term, right? So they have their full-time job, and then they want to know, like, when to buy and when to sell some major stocks. They don't go in and out on a daily basis, but yeah. So this course covers a lot of information on that one. Okay, and the next one is the chart patterns and drawings. So for example, when you go and learn to think or swim, there are a lot of patterns that I drew, say for example, on Tesla. So I typically analyze it across multiple years, and I have these kind of formations that are there. These are all the drawings that I drew manually, but you have to understand how to draw that. So what it enables me to predict, for example, after this move, Tesla consolidated and pulled back significantly. So I was warning that after this consolidation, it can pull back very similar to this thing and this thing, right? So that's what happened. So it's very helpful to know that. And these are the drawings that you can draw, like Fibonacci retracements and channels, regression channels and fans, all this kind of stuff um, will be discussed in that. But why? Because if I draw some drawings here for Tesla, those will not automatically apply to Apple. So they are completely different drawings. So that's why I kind of put all these things and patterns in a one course, which is important to understand. If you are trading, say, 5 stocks, it's important to understand for those stocks what are the different levels and support levels and stuff. So it helps that way. And then the third session is mostly to do with technical studies. The good difference between this one and this one is whatever that's covered here. When you go to Think or Swim and Studies, there are hundreds of studies. So there are so many that they are breaking down M into 1 and 2. So out of all these studies, what are some important studies that you could use? The difference between them is, say, for example, here, when I go and look at this one, it is using moving averages, the Ichimoku cloud, TTM squeeze, these studies. The good thing about these studies is you don't need to draw them. They are automatically drawn. And if you change the symbols from Apple to Tesla, so it automatically draws all those lines for you and plots those curves and stuff, right? So it's very important to kind of understand those also. So for example, just to give an example, right? If you understand moving averages, so there are a lot of chaos here, right? Each one is a moving average, and you might predict some levels. For example, the 200 days average is held as support there, right? But by understanding Ichimoku cloud, you are able to almost pinpoint that specific level from where it bounces. That is the support level, and that was not there as part of any moving averages, right? So understanding these kind of indicators might help. Understanding multiple of them might help, depending on how actively you are trading and how much money you are trying to invest in stocks, right? And this is at a daily time frame, right? So how about on a weekly? What Tesla is doing is it touched that cloud and riding along that. So knowing that cloud, understanding how it works, what are the buy signals with the cloud and sell signals in the cloud, will help you quite a bit. Okay. For example, in Tesla, there is a squeeze that's happening on weekly. Understanding how the squeeze is, what exactly it does, it can provide you a lot of leverage. Once the squeeze resolves, if market starts bouncing back, it can give you probably 2 months of rally in Tesla, like probably maybe up to 800 or 800, 900, maybe or beyond also. Okay. So if there was a similar kind of squeeze when it resolved last time, it kind of significantly increased. For example, here when it resolved, it looks so simple, but from 47 to 75, right? Close to 25% move. Okay. So it's very, very important to understand those things. So that is what covered in these technical studies, and then advanced concepts and screenings. So like I mentioned, if you learn basic technical analysis, chart patterns, and technical studies, you have to know how to kind of put them to work to create some scanners and screeners. So this session discusses that. So just a kind of in-depth look on what exactly is covered. So we'll be discussing the price types, because I mentioned price, volume, and time, right? So the price itself can be analyzed in multiple ways, and time can be broken down into multiple time frames, and understanding the accumulation and distribution pattern. So for example, a quick peek into that would be when you kind of search in Google. So week of distribution, right? So you might come across this one. Okay. So this is understanding this helps quite a bit, um, because you can clearly say accumulation is happening here, the distribution happening here. So what were some of the stocks where you could identify distribution? Because there will be a accumulation phase where a lot of big players accumulate the stock, and then they ramp it up beyond a lot of people expectation, right? They ramp it up so high that the stock is moving crazily. Like Microsoft we saw, and Tesla typically goes through a very intensive ramp up. After that ramp up happens, it goes to multiple periods of distribution. Distribution is where if they invested here, say 1 million stocks at 50 price or 50 price, and they added 1 more million stocks uh, to do this ramp up, but now they have 2 million stocks, but they want it to be only 1 million stocks in their portfolio. So what they do is they create this similar kind of simulate this kind of breakout pattern, but actually they're doing distribution. They want to get rid of this 1 million stocks that they bought uh, here. They have to distribute it. So this is where the strong hands are selling and weak hands like retail traders are buying, right? And then it feels like a breakout, but it never comes, because if they bought it at 50 and they are distributing it 100, when they have to reaccumulate it, what is the advantage for the big players to reaccumulate it at 100, right? So they can force the price to come down as part of this markdown, and then buy it back at 75 or something like that. Okay, so you have to you have to understand these kind of phases. So that's what something that we'll go through. So some examples of that would be, say, Tesla is a very good example. So when you go to long term and look at multiple years of Tesla, so what is happening here is, I'll go and enable years. So what happened here? One big move, right? And then 1 year, 2 years, and 3 years of consolidation. So that was a clear distribution. Okay, markup distribution for 3 years. Can you believe 3 years? Okay, and then after that it made a slight move up, and then it again consolidated for 2 more years, and then this big move came, right? So for example, here what's happening here, it moved from $5 to $50. Okay, so the fact that Tesla moved 1000% from 5 to 50, if you understand that, can draw a channel. So it gives you a probability that it can move from $35 to 350. That is something that you would not have predicted, especially before the split. It was $180 to 1800. If someone would have told you that, even the 462 tweet, right? So at the time, a lot of people were speculating, but as a technical analyst, Tesla did that move before 1000%. And when you know how to draw these channels, you can statistically guess 35 to 350 is not a big deal. So when you go and look at what happened there after that, so that's what happened. Okay, that's what happened. It came back all the way to 350 and did some consolidation and moved above that. Okay, so now when you see this kind of chart, it made this much big move from 34 to 350. So this ramp up happened in less than 1.5 years or 2 years, right? So now there is a clear possibility that there can be multiple years of distribution as Tesla was doing before, right? So if you anticipate that, it can be probably range bound between this 450 and 500 and 1000 range for multiple years. So understanding that distribution phase is inevitable, and understanding that in the distribution phase, it feels as if it's breaking out, but it never breaks out, is really helpful. Another example would be Amazon, that went through a lot of distribution. Yeah, all the sideways action. From a year, it did not do anything, right? So just before this year, what happened here? From March, it did the ramp up, and then it went sideways, 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 and still it's going sideways. And if they did decent distribution, what is the advantage for them to buy here, right? There might be a markdown phase that might come. The markdown might not be that intensive, but clearly if you follow the Wyckoff logic, they would be glad to buy at 2,500 than 3,000. And it's not a big deal when the market is very weak for it to come to 2,500 also. Okay, very similar to Netflix, right? What is happening in Netflix? Lot of distribution, right? It feels as if it breaks out but doesn't. Breakout, fake breakout doesn't, right? So yeah, you have to clearly understand these kind of things so that you start playing sideways action here than markup. So for example, Tesla, when you understand it, you'll be more buying at 500 and selling at 900 than playing for a breakout. Okay, so it's very powerful. We'll be going through those kind of things, accumulation, distribution, and elite wave is more quantitative way of putting it with some rules, very similar to that Wyckoff logic that is and candlestick patterns, moving averages, crossovers. So how powerful are these moving averages and crossovers, right? So for example, let me overlay some very it's simple strategy, but very, very powerful. So let me take off everything that is not required. And I'm just trying to highlight some of these so that it will be very easy for you to understand. So we have plotted two different averages here. Very simple, right? There is a faster moving average, which is 50 days average, and there is a slower moving, which is 200 days average. Okay, so you can make some buying decisions based on averages, like when it crosses 50 days average, like here, you could have bought at 130 and you just say simply long until it holds. And as long as it holds, so for example, here you come out 130 to 360, which is decent, right? And then if you bought it here at 423, you come out here at 758. Okay, that is a very decent profit just by using one line on average, right? And as you can see, um, you can make decision based on one average, or you can take two averages and buy at a crossover here. For example, if you buy it at 49, or whenever this crossover happens, which will be here, somewhere here at 61, and you stay long as this average, faster moving average, stays above slower moving average, okay? And you come out here, which is at 620. That's a very good thing, right? And Tesla is different, but if you go and look at Apple, it lets you ride the big waves. Say, for example, you buy here and you're still in the trade. You did not sell the Apple because the moving averages did not do a negative crossover on daily Netflix, right? So there was the positivity here. You buy it at 344 and you stay long until this time, which is 514. And now it's about to do that crossover. So whenever this kind of crossovers happen, this is probably the beginning of a newer trend. And last time when the trend crossover happened, you see how long it lasted. So just understanding this moving averages and crossovers might help you um, ride the big waves. And if you go and historically analyze these things, you don't need to be actively trading, sitting before the computer, right? So just a simple logic, buy here. Maybe you don't need to wait until all the way to crossover happens, right? What you can do is your logic could be buy at the positive crossover, but sell here when it loses the faster moving average, or sell here some, right? But this probably is where you sell, and then, or at least this is a good buying point at 339, and you're able to play here for some time, and 321 to 516. So it's such a simple strategy, very powerful. And yeah, so those are the things, and these, all those techniques, it's a lot of things to chew, and but it's very useful. So that's why it's part of basis, and it's just part of first course, right? Second course, we discuss all these things and do a deep dive into this stuff. And third course is most of the technical studies that I have. And fourth course, half of the session will be understanding market and indices, how to measure relative performance and stuff, and also creating scanners and stuff. Okay, so I think that hope that was helpful. Hope you understand that it is not some just people talking. It's actually what algorithms is using, and you're able to do this thing. So active traders, for example, if I'm doing active trading, this will be my go-to dashboard. Not to scare you, but this is where we are looking at some of the stocks, and we know when exactly it reverses. And some of the alerts are being posted based on this. We're looking at volume, the cloud. So for example, so let's say I'm using this thing, right? If you take market overall, right? So market try to go through the cloud, but it bounced, and see today, and that cloud is acting as a support. So what it enables me is understanding this cloud. I can guess that from 362 it can go to 366. Okay, but on a daily, the cloud is on 355. Okay, so if there is a possibility of pullback, it can pull back to that level. So no one would know without this cloud that it is kind of a support at 362.2, right? But that's the advantage that you have, especially when you're actively trading. It's a very powerful tool. Okay, so with that, I think that's all I had to share. Um, yeah, Kishore, you can add something about the trainings or the rooms and stuff if you want. And
Sure.
if you want to answer some questions.
Yeah, sure. Thank you. Thanks for a great session. So again, yeah, right. Our objective is to make more and more traders with knowledge, with awareness, because sometimes just following alerts also may not help us, right? Because most of you are working in IT or some other full-time jobs. So with technical analysis, you can be independent, you can learn, and you can do things in a much better way than actively trading all the hours. So that's our objective, to give this awareness education. Either it can be options, it can be stocks, it can be technical analysis, whatever it is. With knowledge, we can make a lot more profits than where we are now. So already, right, nearly more than 1,000 to 1,500 members were trained since January. So we have next batches coming from September 11th for technical analysis. It will be a 4-week course, generally every Saturday from 10 a.m. CST to 1 p.m. CST, followed by approximately 30 to 45 minutes for Q&A. Whatever questions you have, you can ask, and you can learn all those things. Right? Again, if you want to learn through YouTube or something, you are welcome. Right? But generally, we won't have the discipline. We won't stick to that. But when we register to a course, then it will be as part of your routine, because you paid something. You'll be attending, you'll be asking questions. It will be like a live session where you can ask your doubts, where you can look at various charts. It will be like, it's not just theory, it will be just like Uday shown multiple examples. We will be explaining concepts along with examples for various stickers, various symbols. So you can learn a lot, right? Most of us are ready to lose a lot of money in trading, but we don't put enough time to learn. So that's where these trainings will help you to learn better and to reduce the risk, and increase our profits. And yeah, and also, right, we have another trainings for options also, for end to end. Again, options, there are various strategies. It is not just calls and puts, right, with spreads and iron condors, with lot of advanced strategies. The risk of option trading will be minimal. uh, so uh, again, if you are interested to learn more about options end to end, from basics to advanced strategies, we have a batch starting from September 11th. So it will be every Sunday, 10 to 1 for 4 weekends. Technical analysis will be on a Saturday, 10 to 1 for 4 weekends, and the options will be for 4 weekends, starting from September 12th. So again, I shared a link there. You can click on that, and you will have all the links. If you want alerts, or if you want trainings, or you want right. We are like a Costco financial services. Whatever you need, whether you want to make income using your time, make income for trading, or you want to, so every all the links are available. You want to learn about how to do technical analysis, everything is available in that link. So please take time, and yeah, again, right, that's we spent years together to make a 80K, 100K per annum. So definitely with this 4-week course, definitely we can make a lot more with that learning, right? So there is a wealth of knowledge, wealth of information in in these trainings. So we have hundreds of testimonials if anybody want to see, from all the members who attended. Uh, and we'll take few questions now, and then we'll end the session. Yeah, it will be Uday will be doing all the Saturday sessions, right, for technical analysis and options. The entire batch will be done by Uday. So as part of the right, is it a paid course or included in the membership? So for membership, we have onboarding trainings, and we have some uh, trainings, but they will not include this end-to-end trainings. So these end-to-end trainings are different. I'll update the option training link also there, but you can even use the previous link which is available there for options end-to-end, and you can register. Otherwise, in next 5 minutes, I'll update it. We'll also share the slides. We'll also share some books which are useful for technical analysis during the training. Yeah, course material will be available. So yeah, Uday will be sharing all the slide decks, which we'll be discussing throughout those 4 weeks. Best trading brokerage platform. Generally, right, we suggest Thinkorswim. Most of us use Thinkorswim, which is a part of TD Ameritrade platform. Again, yeah, there are other platforms like Fidelity or eTrade, but we think Thinkorswim has a better scanning facilities or better charting facilities. So we suggest, and we will be using that as part of the training sessions, all the demos. So we suggest to switch to Thinkorswim if possible, because especially Robinhood got lot of limitations. We cannot do a lot of things. So if you are using Robinhood, better to switch to Thinkorswim.
Yeah, just this session being the power of technical analysis, I did not discuss about options, but a lot of people might be trading options already. So if you are trading options, exactly the same in-depth level of fundamentals in the first course, and then some popular strategies that you could use and some advanced strategies. Some we're going through a lot of deep dive into each and every possible scenario of options and how you could make money in those things. For example, you can buy calls, but if you are buying calls in Netflix, which is in distribution phase, you might not be able to. You might be getting consistent loss, right? So in distribution, you have to use different strategy. In accumulation, in ramp up phase, you have to use different strategies. So technical analysis helps you identify the momentum when exactly the big ramp up is going to come or when the markdown is happening. But using options, you can make money even if the market is moving sideways or the stock is moving sideways. So, or if you have stocks, you can protect them from a big down move, right? So those kind of hedging strategies, some kind of earnings, all those will be discussed as part of this options course. So overall, this is what the offerings. So the stock sessions happen on Saturdays 9 to 1. Option sessions happens from on Sundays 9 to 1 to keep it simple.
10 to 1, 10
Or
CST.
10 to 1, sorry. With room to questions until 2. Yeah. Thank you.
There is no charge to use the Thinkorswim platform. It is a free tool, just like Robinhood, and there is no brokerage charges or anything. So yeah, there are a few questions if there is a charge to use Thinkorswim. So I'm reading the questions and answering all the questions asked in the chat window. How do we scan for entry? Do you want to explain that today?
It's not a simple process that I typically follow. I follow a very thorough process for entries, but you might be understanding it more when we go. Let me actually get that information. You might be understanding more once you go through the technical analysis, but at a very high level, it's not only looking at the chart of a stock, it's about looking at the options, the entire market altogether. So I'm trying to pull a document here, which typically gives it. Okay. So not this guy. Okay. So here, like before I even trade, right? I would look at overall market bullish or bearish, and if the stock above critical moving averages, any potential events coming in, any unlisted events or earnings events coming in, had the stock rallied a lot, if the markup phase done, what is the IV and IV percentile, and then we deep dive into how much risk we want to put together, how many trades and stuff. So how long I'll hold this and how I'm going to prevent losses, what are the price target 1 and 2. So this is a thorough process, and I would encourage all of you to come up with your own process. But multiple things will be checked technically before I enter trade. That's the right entry or not. For example, Amazon is at this major support zone now. So would I go and buy stock? Probably not. Would I go and buy calls? Probably not. I probably would like to sell put spread or maybe an iron condor here, so that we are waiting until it consolidate. It might consolidate for a lot of time, multiple months. So it depends on a lot of factors, how to make the right entry. It's a simple question. The answer is not that simple, especially when you want to increase probability of making money, right? But if you stick to some basic things, answer can be simple as soon as it gains 50 days average. As simple as that, right? So I have this 50 period average, and if it comes back about its 200 average and 50 period average, that's where I'm going to buy. So for example, if you bought here, that's a move that you could make. If you bought here, that's the move that you can make. So the strategy can be very simple based on few technical indicators, or it can be pretty complex also. I hope that answers your question.
Which is a better one, SMA or EMA?
So what I typically do is for the long-term averages, I use simple moving average, because like 50 days means 50 periods, so it's a very long-term average. But for short-term averages, I use EMA. Based on one of the slides where I summarize that, let me pull out that quickly. So this is what I use. Typically, I use 5, 8, 13, which is EMAs until 20 or 34 also for that matter. And anything 50 or 100 above, I use SMAs. Exponential moving averages are good if the stock is very fast moving like Tesla, but for some stable stocks, simple averages might do. So when you have to stick to one, so what I do is typically for anything less than 50, I use EMAs so that they are catching up fast with the price, and above 50, I use SMS.
Yeah. There is a question from Venu, like what does keep stop to entry means? So Venu, for example, right, when we enter a trade, for example, you are buying a stock for $10, your stop loss might be around $9 or something. But when stock moves to, or it may be option premium or whatever it is, when it moves to, let us say $12 now, stop to entry means you are moving your stop loss from $9 to $10. Whatever is your entry price, you are moving your stop loss. So even if stock suddenly drops also, we won't be in any loss. So that's what is stop to entry means.
Yeah, like here, if you entered in Tesla here, sorry, in Netflix here, and if you want to create a stop, you can right click there in think or swim, and because it's a stop, you're selling it. Let me go here and sell, and it brings this thing, and you are putting a stop loss, and your entry price is somewhere around 530, I assume, because it's doing a positive crossover, right? You want to put a stop loss below that 200 days average, which is 517. You can do that, 517. And then let me just change it to 2 and confirm. So what it does is it actually sets that level. That is to prevent, right? But actually, if you want to buy only if it goes above certain level, you can do a buy stop also, where once it goes above that, then only it breaks out, then only it buys. Okay, but yeah, stop at entry means like finding a level of interest and putting that stop so that you don't make loss.
Which one is better to use, MACD or RSI?
Both of them, actually, not just those two. Some other indicators like volume, TTM squeeze. My actual analysis will be very even intense, but you don't need to be um, like this is what typically that I use, which has RSI, MACD, and all this kind of stuff. Because if you think one indicator would be sufficient and gives a true picture, um, that's not true, because if you have to understand exactly how that indicator is created, what exactly it is representing, sometimes whatever it is representing can amplify your decision, like stabilize. If you think it's going down, it can assert that decision that yes, it is going down, or the indicator might say it's going up. Okay, so when you get that kind of divergence where the indicator says it's going up and the stock is actually going down, then if you do multiple indicators, then out of 5 indicators that you use, if 4 are screaming that it's bullish and 1 is screaming that it's bearish, then you have a choice to prefer those other indicators and play bullish. So I would recommend at least RSI, MACD, uh, moving averages, Bollinger Bands at a minimum.
Uh, why Thinkorswim consuming buying power for OCO, limit sell and stop loss order, even though we try for long trade and not short trade? Buying power for OCO.
So once you put an order, right, for cancellation or buying, you do not know when it executes, right? So it takes off that buying power from you, um, and keeps it aside, so that in case if it happens in the next second, it has the ability to trigger that order for you. So if it is common for it to hold the margin, OCO margin, but if you do not want it to be held, better to have an alert, say at that level. Say if you can put an alert here and create an alert from that, and as soon as that goes that level, you're not tied with the buying power, but you can actually get an alert and go and see the chart and make a buying decision at the time.
Yeah, I think we are done with all the questions, right?
Sure.
Yeah, and yeah, we have onboarding sessions for all the members on bi-weekly, every 2 weeks. So there are some questions on Thinkorswim and other things which are not in scope for this one. So we'll be answering them as part of onboarding sessions or as part of other sessions. So when going into trade, what chart duration you generally consider? Daily, monthly?
So that's a good question, and that gets covered as part of the basics. Very, it depends on whether you're a swing trader and um, day trader, right? So you can use multiple time frames. So I typically for swing trader use monthly, weekly, daily, and hourly. For day trading, I use from weekly to 15 minutes, but it depends on the trading style you have. But again, as you can see here, we'll be going deep dive into this. So if you are planning to attend these sessions, you probably are going from a beginning phase all the way to expert phase, like probably end to end what exactly you need to know from technical analysis perspective. It might be overwhelming a little bit, but it's good to know than rather know, and then you can choose to use only few indicators after understanding everything. So, and you can keep on changing that over time. Like this year I'm only focused on using these 2 indicators, but once I get comfortable with those 2 indicators, I'll add this another into the equation and see how my trading style changes. So yeah.
Yeah, thank you everyone for taking time on a weekday evening. So again, all the details are on the link which I shared, and we'll also be sharing this recording on the US Equity channel. So yeah, if you have any questions, feel free to send me an email.
Thank you, everyone. The fact that you took time and attend this session means you felt some importance in technical analysis, or you wanted to kind of learn, or you want to get a good understanding of why you are not making money or losing money. So yeah, thank you very much for that interest on attending this session. All the best in your trading. Stay green. Thank you.
Good night, everyone.
Night.